Hey guys, what's up, how's it going? My name is Rob and welcome back for another video on the channel. In today's video, I'm going to be sharing with you guys 3 top Canadian dividend stocks for passive income in 2022. So I got a good mix of stocks here today. We're going to be focusing on some good consistent stocks, some slower stocks, some more higher yield stocks. So we're going to kind of have a bit of a mix here today. So let's jump inside the first stock, let's get this video going, and let's check it out. And as we go through the video, what I'm going to do is I'm going to be showing you guys how much money you're going to make passively if you invest $10,000 into each one of these stocks as we go through the list. So the first stock we're going to be talking about in today's video is going to be Fortis Stock. And Fortis has the ticker FTS and currently has a dividend yield of 3.68% on the TSX. Now, if you guys don't know, Fortis is one of the more safer stocks, one of the more reliable stocks because their business and cash flow is pretty consistent. They're one of those companies that has a pretty consistent growth. Their dividend yield isn't super crazy. Their payout ratios are nice and conservative, and they're one of those slow growth stocks that you invest into now, and then over the next couple years, you'll get that nice slow but consistent growth. They're a nice, good defensive utility-based company that you can grab coming from out of Canada. And even throughout different things that happen in the markets like pandemics, we've seen that Fortis stock has actually had low volatility, meaning that the stock actually is good, consistent, and is definitely a good stock to hold if you like to have that consistency throughout your portfolio. So definitely take a peek at Fortis if you like a nice, good defensive-based utility company that currently has a solid yield that is slowly growing over time. Now, I'm always a big fan of stocks that regularly grow their dividend yields. As a dividend investor myself, I like stocks that currently have decent yields, but I also like stocks that are currently, growing that dividend yield on an annual basis. And Fortis is currently growing their dividend yield on about that 6% basis, and they predict that they will increase their dividend yield on an annually basis by 6% up until 2025. So not crazy growth, but also, once again, like I mentioned a couple times already, they have that good consistent growth. So I do like that 6% increase. I think it's pretty decent. It's pretty solid, but it's also not too crazy. And there you go. You can kind of conceive that conservative nature of this stock. And when it comes to utility companies on the TSX, Fortis really is one of the top dogs. They've had dividend increases for up to 48 years, so good, consistent, and consecutive dividend increases. So if you're looking for a good utility-based company coming out of Canada, I would definitely recommend you guys take a peek at Fortis. If you invested $10,000 in Fortis stock today, you would get about $360 on an annual basis in terms of dividend income, and that would equate to be about $30 per month or so if you invested that much money into Fortis stock. Now, the next stock on our list is going to be a little bit different. We're going to kind of go in the opposite direction and focus on a more higher yield based company. And the stock we're going to be talking about is Capital Power. And Capital Power has the ticker CPX and has a dividend yield of currently 5.68%. So as you guys can see, this stock is almost the opposite to Fortis that we talked about earlier. It's got that high yield, and it is a utility-based company as well. Now, the good thing about Capital Power is that they are a pretty big company. Their market cap is in the billions, and they are independent power generators. So they do, acquire different facilities. They create their own power using different various sources, and they have a pretty good revenue and business model overall. And if we look at the price of the stock over time, we can see that there is a bit of a dip that happened last year. So this stock still hasn't fully really recovered yet. Nonetheless, I still think it's a pretty good company, and we do have a nice yield that's kind of sitting down from the lower stock price. So if you want to pick up the stock right now that has a pretty good yield for a lower price overall, we might see a rebound happening maybe towards the end of this year or maybe later on. So that choice is up to you guys. But if you guys want a nice, good, higher dividend yield stock that's a utility-based company, definitely check out Capital Power. And just like Fortis stock, Capital Power, I like to see stocks that are increasing their dividend on a regular rate. And Capital Power has been increasing their dividend. So once again, that's always a good thing to see. You always want to look for companies that are steadily growing that dividend over time. If you invested $10,000 into Capital Power today, you would get about 562 dividends on an annual basis, and that would be about $46 to $50 per month. So you can see that's a bit of an increase from the previous stock we talked about, which was Fortis. So if you guys want more dividend income, or you're kind of in that stage in life where you kind of rely more on the dividend yield, and you don't care so much about the growth of the stock, you could take a peek at a stock like Capital Power that has that higher yield. Now, the next stock of this list is probably my favorite stock on the list. And as you guys watch my channel, you know that I'm a big fan of the Canadian banks. So I decided to go with RBC today. And you could really stick any of the big banks, but my two favorite stocks out of the big banks are either TD stock and RBC. So today we're going to kind of switch things up because I talk about TD a lot on this channel. So we're going to focus on RBC stock, and I'll talk about why I think, if I was to pick a good dividend quality stock right now, I'd probably go with one of the big banks, and we're going to go with RBC in today's video. So if you want to find RBC stock on the TSX, you can look up RY, which is the ticker, and it has about 3.24% dividend yield at the time of doing this video. So when it comes to RBC stock, why RBC stock over some of the other banks? Well, really all the banks are good quality stocks, but RBC is one of the biggest stocks not only in Canada, but it's actually one of the biggest bank stocks in the entire world. They have the biggest market capitalization in all of the Canadian stocks. And when it comes to investing just in general, the banks are some of the safest quality investments because they just have so many different ways to make their money, and they just have so much money. Even throughout the pandemic, we've seen these banks sit pretty good, and they've had amazing revenue over the past over the past year or so in the recent quarters. I think going over the next couple of years, these bank stocks are going to do well, and we've even seen this over the past year or so. A lot of the big Canadian banks have seen some pretty big increases in terms of their share prices. And as a dividend investor, like I mentioned, we look for consistency and we look for growth. Well, how about this for consistency? RBC has increased their dividends and pay their dividends out on a regular basis over the past 150 years. So not only are they one of the biggest companies in terms of Canadian banks, they're also one of the oldest, and they also have one of the best track records for paying those dividends on a regular basis. And like I mentioned earlier, in terms of growth, RBC over the past quarter actually seen a 40% increase in growth over its net income, and this could be probably because of interest rates rising up, but we've just seen that Canadian banks continue to adapt to different things going on in the market. So we've seen that revenue increase, and I think this is going to do pretty good in terms of increasing the share price, and the company is just going to do well as that net revenue just continues to grow and grow over time. And the other good thing about the Canadian banks is they finally got the green light to increase their dividends. If you guys remember in the pandemic that happened in 2020, they basically weren't allowed to increase their dividends for a couple years. So we're getting a backlog of dividend increases, and we've already seen some dividend increases at the start of this year. RBC recently announced that they increased their dividend by, I think it was about 12% or so. Most of the banks kind of hitting that 10%, but I wouldn't be surprised if even towards later on this year or even at the beginning of next year, we also see a nice big dividend increase. So RBC increasing that dividend by 12% this year to kind of make up for the other the past 2 years it hasn't increased that dividend. It's pretty good, and I honestly wouldn't be surprised if we see another dividend increase maybe coming towards the middle or towards the end of this year. One other big point I want to mention when it comes to Canadian bank stocks and like types of stocks like these that I really enjoy is not only do they have a good decent dividend yield currently sitting about that 3% or so, 3 to 4%, but they also have solid dividend growth, like we mentioned. Increasing that dividend yield by 12% it definitely shows us that. But they also have good share price appreciation. So these bank stocks really give you everything. And that's why I think they're always going to be some of the best stocks to invest into. If you're a beginner, I always say, pick a Canadian bank, TD, RBC, whatever one you want, and make that your first stock because they are some of the best dividend stocks, growth stocks, just to buy generally speaking. If you invested $10,000 in RBC stock today, you'd get about $300, $326 in dividends per year, and you'd get about $25 to $30 per month. So pretty similar to Fortis Stock. However, I would recommend that, my personal opinion, I think the bank stocks are better investments to buy. But if you want to diversify, definitely look at investing into different stocks, different sectors and whatnot, because you want to have a well-diversified portfolio. In full disclosure, I do hold Fortis. I do hold RBC stock in my portfolio, so I just want to kind of mention that really quickly there. So that's it for today's video, guys. If you guys liked the video, please let me know what you guys think in the comments, and be sure to smash the like button. It really helps the channel out. And if you guys want to see more updates when I do these videos, be sure to subscribe. So take care, guys. I hope you guys enjoy your week. I'll talk to you guys later, and take care.